and they are just coming out right now on Morgan Stanley. The estimates called for revenue of $9.29 billion on earnings of 89 cents a share. It looks like this is a miss based on what we're seeing here in terms of Morgan Stanley's fourth quarter. 80 cents on EPS is the number versus an estimate of 89 cents. And as you can see, the stock is down on this report because it is, in fact, a miss. Like I said, revenue of 9.29 was the estimate. It's actually $8.5 billion on revenue here. $8.54 billion on revenue. 80 cents a share on $8.54 billion. Ken Leon, wow, this is not what we were expecting. That stock has gone from up 3% to down 1.5%. A miss here of 80 cents a share. Your reaction?
It takes some of the momentum away from Goldman Sachs yesterday. Very similar businesses in many ways. The miss in terms of revenues is something really to take a closer look at. And why? I think it's going to be in the investment banking and in the underwriting area. Trading, again, if they don't have that pickup in equities, we already know that fixed income trading and others going to be weak. So a little bit surprised here.
James Gorman says the global environment remains uncertain. He is talking about the weakness in global markets. Of course, we know that the emerging markets have been under pressure. We saw that in Apple's numbers. We know that China has slowed down quite a bit. So he's talking about the international story as a reason for this miss.
So for Morgan Stanley, 65% of their revenues is North America. Europe is second. Asia is third. We knew that Asia wealth management was weak for the quarter. And I think that when you're looking at both the capital markets and for wealth management, a little bit different outside the U.S.
But if he's saying it's the global economy, and we understand there are always concerns about the global economy, but you mentioned Goldman Sachs with a similar business seeing less of a problem. Is that a problem for Gorman?
He's being very cautious. Yesterday, we saw 3.5% growth outlook for GDP for global, both from Goldman and Bank of America. So here we're essentially seeing a more cautious view, and possibly it may relate to what they think is happening in the first quarter.
What do you think about these numbers? Net sales and trading revenue at $2.5 billion, wealth management revenue $4.14 billion.
So wealth management always provides a more stable business for Morgan Stanley. Again, the real issue here is what's the weakness in the capital markets, and I think we know that it's really related to investment banking for equity underwriting. IPOs, they're going to probably talk about the pipeline looking better and improved, but getting M&A from announced to closed transactions, and the M&A market today, even the last year and a half, is large deals. They take 12 to 18 months. So if you're looking for performance I think what we're seeing here is Morgan Stanley's being cautious because they're not certain about the first quarter.
You know, it's interesting because you got such a big IPO calendar, right,
yes,
for 2019. What happens now, given the weakness at the end of the year? I mean, first quarter, do you write that off? Do those companies wait?
Well, fortunately, the markets have stabilized.
Yeah.
As opposed to where we were a month ago. So that enables the window to be open for IPOs, and I think they're going to go ahead.
But the government shutdown does prevent. Sorry, Dagan, were you about to say this?
Compensation at Morgan Stanley was actually down to $3.8 billion from $4.3 billion a year ago on lower net revenue. And then non-compensation expenses were up to $2.9 billion from $2.8 billion a year ago. So non-compensation expenses up slightly, but not that much. And then with compensation was actually lower.
One area to look at, and this was sweeping to get high earnings this week, and let's see for Morgan Stanley, tax rates. Some of the banks were at 13, 16% effective tax rates. Even Goldman was 16%, but they guided 21 to 23% for 2019. So if we look at Morgan Stanley, I would bet it's below 20%. And I think that was also a benefit for earnings, but not enough today to get to that 89 cents consensus.
You know, we knew that the markets were so troubled at the end of the year. No surprise that James Gorman is saying that these numbers have been hit by volatile markets in the fourth quarter. You had, like you said, there was no high debt issuance in the entire month of December. You had volatile markets where people were scared out of the market. 80 cents a share is the number on earnings per share for Morgan Stanley for the fourth quarter on revenue of $8.54 billion. That is lower than the estimated $9.29 billion. It is a miss. This is the weakest point for the stock right now. It had been up 3% right before the numbers came out. It is now down 4.25%.
One thing to keep in mind, Morgan Stanley had a record third quarter, so sometimes, especially with the investment banks, it balances out over 6 to 12 months. So I would say to some degree it was definitely a weak fourth quarter.
Okay, so they're underperforming or they're just missing the estimates?
They underperform their peers.
All right, we will leave it there. Ken, great to have your analysis this morning.
Thank you.
Thanks very much. Ken Lee on the air.